Are home prices in the Seattle area officially back on the rise? In this video, we're gonna talk about just that. Before we jump in, make sure you subscribe to the channel so you don't miss any of my Seattle real estate content and videos about what it's like living over here if you're moving from out of the area. I love helping you guys out. Those of you that reach out to me here from YouTube when you're looking to purchase a home, I'm an active real estate agent in this area and would be happy to help. But like I said, this video, we're gonna talk about what's happening in the real estate market as we're getting into kind of the middle of May here of 2023. There's a lot that's been going on, so I really wanna make you aware of why our market is where it is. We've seen interest rates go up a lot over the last 12 months, but yet the market is still relatively competitive. Prices are starting to go back up. So let's try to figure out what's happening right now and maybe what we can expect for the rest of this year. So I want to jump in and show you some stats here first. You can see on my screen here, this is median home prices for King County, which is, if you're not familiar, that's where Seattle is, in King County. So you can see here in April and May of 2021 on this side of the screen, this is median prices were about $1 million on about 12 months ago. Now, as we are a year later, median home prices in King County are about $875. However, we hit the bottom, what looked like the floor, $800,000 in January of this year. So we fell 20% from April, May of 2021 to January of this year. Prices fell about 20% in King County. And now we're back up about another 9-ish, almost 10% in prices, back up to $875 in April. So despite interest rates being where they are, and we'll talk about interest rates in a second, prices are going back up. Let's look at Snohomish County, see if it's the same trend. Load here. So April of 2022, home prices were $830,000, median home prices in Snohomish County. We really hit that floor around December and February, about $685, $690. Now in April, we're back up to $740,000. So we've seen multiple months of steady increase in home prices in both King and Snohomish County. Now another important stat to look at is the months of inventory. This also helps us see really how the market is moving and how homes are moving. So again, this is Snohomish County here. Oh, not loading. Let's see. There we go. All right. So you can see when we're looking at months of inventory, the definition of this statistic is if no new homes go on the market, how long will it take us to sell out of our current inventory? So the lower the number, the hotter the market is. So you can see at the peak of our market in April of 2022, we had almost half a month of inventory. Really, if no other homes went on the market, we'd be out of houses in 2 weeks. Absolutely insane. Then we started to hit that peak and it started to get close to 2 months of inventory. So it almost quadrupled what we were at its peak. And now you can see for the last 3 months, we are much lower again. We're about 1 month of inventory in these last few months. So things are speeding up again. Homes are selling quicker. This is Snohomish County. Let's look at King County, see if it's the same trend. Again, this is for residential homes. I'm not including condos here, just residential homes. Give us a good picture of these stats. All right, so here's King County, again at the peak, about half a month in April of 2022, then about up to 2 months. So very consistent with what Snohomish County is, and then hovering right around a month right now. So our inventory has almost cut in half in terms of the time it's sitting on the market since the kind of the bottom of when prices really fell. We're at about 2 months of inventory. Now we're right around a month of inventory. The last stat I want to look at is inventory itself. So let's look at new listings, number of new listings here that are hitting the market. So this is King County again. This is the most telling stat as to why we are where we are in the market right now. Why, despite interest rates being higher, there's still competition and prices are going back up. And this is the big reason why. It's because we have no inventory. So at the peak of the market, April, again, 2022, in King County, we had about 3,200 new listings in the month of April. Pretty typical. right? Decent amount of inventory. We even still considered that a little bit low last year too. We were still saying, hey, we've got low inventory, we need more inventory. That was still low, 3,200 last year. Now, year over year, 12 months later, April of this year, 2,000 new listings. 3,200 to 2,000. So 1,200 less listings per month that's happening right now in our market in King County. That's just insane. It's really hard for our market to sustain that and be able to have a drop in prices when you see inventory falling at such dramatic rates. Let's look at Snohomish County. Just confirm that Snohomish County looks about the same. So peak of the market, about 1,400 to 1,600 new listings a month. And now we're not even at 1,000, not even at 800. 767 new listings in April of this year versus so about half, about 50% decrease in the amount of inventory per month in these markets. So it's when people are talking about, hey, the market is due for a crash, things are going to come down, prices have to fall because interest rates aren't coming down right now. What we want to look at it's simple supply and demand, right? We have to have much more supply than we do demand for anything to fall off, prices to fall off at any dramatic rate. And that's just, we're not even close to that, nowhere near. Our inventory is so low, so much lower than we need it to be, that we're not, even despite interest rates, despite rates where they are, even if they go up a little bit more, I would not expect to see prices, start falling and coming back down. Like we saw in the first stat there, prices have been going up for the last 3 months, right? They've been going up 8 to 10% for the last 3 months when they had fallen 20% from the peak of the market. If rates go up further, which I don't think there's great evidence that they're going to continue to go up much further. I also think we need to be hesitant in saying they're going to come down a lot this year. Let's just look at rates right here. You can see today's current rates, 6.57 for a 30-year fixed. You can see the chart down here of how rates have moved. We were down in the low threes in 2021. So we've really been fluctuating around this 6.5% for quite a while. Since the end of last year, got up to 7 towards the end of last year, and we've really just been fluctuating around this 6.5%. So not a lot of movement there. So whether it goes up or down a little bit, I would not expect any big change in the market. I would only expect prices to continue to rise because of this inventory. That's the most important statistic to look at here. Prices are not going to come down in the near future. This year, I would not expect, while inventory is so low. We still have a decent amount of demand compared to inventory. Like I mentioned, there are houses, plenty of houses, that are getting multiple offers again, despite the 6.5% interest rates, because there are not that many options, multiple buyers competing on the same thing. Now, they're not going for 10 to 20% over asking price like they were at the peak of the market. It's a much more mild competition than it was before. But all this to say, we're trying to figure out what's going to happen for the rest of this year and going into next year. And if you're evaluating if it's the right time for you to buy and you're saying, hey, I want to hold off and wait for prices to drop, the statistics that we're seeing right now show us that we hit the floor of those prices, right? They came down 20%, and that really was January, February of this year where that floor was. They have only gone up since then, again, about 8 to 10% in increase in those prices again. Unless we see a dramatic upshift in inventory, which is not going to happen, especially at these rates, all of these homeowners, they've got 3% rates. Everybody financed when rates went down to 3%. So everybody's got a 3% rate that currently own a home, unless they bought right within the last year, then maybe they have a 4 to 6.5% rate. But the majority of homeowners have rates right around 3%. So they don't want to sell and then have to buy another place at a rate that's more than double what they currently have. So they're staying put until rates drop back down. So until we see rates drop down, I would not expect to see any big increase in inventory, which is going to keep prices where they are, or to continue to increase, in my opinion. I do not see any scenario this year where prices are going to come down in any dramatic fashion. And I hear this all the time. I've been hearing it my entire career in real estate for the last 7 years that, we're gonna wait to time the market when it drops, when prices come down. People were saying that in 2018 and 19, and they missed out on a huge opportunity for those gains in equity when the market exploded. And they can no longer afford to live in the area that they want to live in because they didn't buy a home at that point. What's most important to evaluate when you're buying a home is your personal financial situation. You got to make sure you are set up and in a good spot to buy. It makes sense for you to buy financially. And then I don't think you need to hesitate and try to time the market, because it's nearly impossible to time the market. And if you were trying to time the market, the stats show us that you already missed the boat in January, February of this year. We don't see indications right now of prices coming down. Just to reemphasize, it's simple supply versus demand. Our supply is far too low, and we still have a steady and good amount of demand. There's a lot of home buyers in this market. When you look at average US birth rates, and I can probably put a chart up on here, there's a lot of millennials that are currently, in general, currently hitting the home buying age right in the late 20s, early 30s, when you look at historic birth rates for the US. So there's a lot of people hitting our age that are entering the home buying market and that want to buy a home. 95% of people want to be a homeowner. So there's a lot of people that want to be in the market. So the demand is there. The supply is not. And until we see a dramatic shift in that narrative, in that supply versus demand, we're not going to see a huge drop off in prices, if at all. And the signs that are showing us right now is that prices will continue to go up in the short term, and then we'll see what happens from there with rates and the economy as a whole. All right, well, this is just my thoughts, my personal opinion on what's happening in our local Seattle real estate market. If you've got questions about the market, feel free to comment down below or reach out to me. I'd be more than happy to answer those. And like I said, if you're looking to purchase a home here in Seattle or the surrounding suburbs, I'd be more than happy to help you out with that process. Thanks for watching this one.